Hi guys, and welcome to today's lesson. So today's lesson is all about support and resistance. So we covered basics on support and resistance on the other lesson. You should check it out. So today we are going to discuss the role of support and resistance in technical analysis, types of support and resistance, and trading strategies utilizing support and resistance. So let's dive in. So as I already identified the zones, so you can check this out on my other video. So basically, what is support and resistance? For a brief, support is just anything. This is support. A market comes and finds multiple resistances from this zone. This becomes a support zone. If the market breaks below and comes back and finds resistance, this becomes a resistance zone. So basically, support zone is a zone in the market where price bounces from. So that is support and resistance. So for our lesson today, so you can find more about this on our previous lesson, an in-depth analysis on how to identify the zones. So, but on today's lesson, we're going to talk about more on role of support and resistance in technical analysis. So first, the importance of support and resistance. Support and resistance is important because first, they help you find where to place your orders, where to buy and sell. So in order to trade well, you have to know where to buy. So as the old age saying goes, you buy low and sell high. So support and resistance essentially helps you to find where is low and where is high in order to buy or sell. So there are three ways in which the market reacts to support and resistance. So support and resistance zones are reacted in three major ways. So let me illustrate. So these are your support and resistance zones. So there are three major ways in which market reacts to these zones. First, the market can either break through the zone. This is a break. As you can see, the market comes with momentum and breaks through the zone. The market can either bounce off the zone. This is a bounce. So the market comes from down here, finds resistance right here and bounces off. Or reject on a zone. So I'll go over again. The market can either break through the zone. This is a break. The market can either bounce on a zone. This is a bounce from the zone. Or break and retest. So for the break and retest, so this is the break. This is the break. And this is the retest. So a break and retest simply means that the market comes, breaks through. This was once support, as you can see. Let me illustrate using this point. Okay, let me illustrate using this point. So this, the market breaks through. It simply means that the market, this was one support, but the market broke through and is now coming from the downside and becoming resistance. So this becomes a breakout and retest. So this is the retest. So those are the three basic ways that the market reacts to these zones. So in order to know what to do when a market reaches a zone, you have to either wait for it to bounce from the zone. This is a bounce. Wait for it to break from the zone and wait for it to retest the zone. So a retest only comes after market has broken through the zone. So I hope you understand that concept. So this is very vital for you to trade support and resistance, because they tell you when to enter the market, when to exit the market, and when to stay out of the market. I'll show you in a bit. So let's discuss this. So let's go on a live chat. So as I've explained, I showed you how to identify this zone in my previous video. You can check it out. So this is a bounce on the zone. Why is this a bounce? Market is finding multiple resistances on the zone. This is a breakout of the zone. Why? Because market comes and breaks through with momentum. So by now you understand the three ways that the market reacts to these zones. So for our next point, we'll discuss types of support and resistances. So this is a zone. So for our next type of support and resistance, we'll discuss the trend line. What is a trend line? A trend line, simply put, a trend line is a vertical line in which price finds resistance and support. So for example, these are trend lines. So price comes, finds support, finds resistance, finds support, finds resistance, finds support, finds resistance, and so on. So these are trend lines. Trend lines, simply put, trend lines are vertical support and resistances. So in our market we find, let's first identify our trend line. So this is how you identify a trend line. How do we know this is a trend line? Because price has bounced from it 1, 2, 3, 4, 5 times. So that is a trendline support. A trendline support is only valid if price bounces from it 2, 3 or more times. So for example, this is also a trendline support. Why? Because price has bounced from it 1, 2, 3, 4 times. So that is our second type of support and resistance. So to distinguish between a strong and weak support and resistance zone, it is very simple, as we have already covered. So how to distinguish between a strong and weak resistance is the number of touches that a zone presents to the number of touches that touches on that zone qualifies it to be a strong or weak. For a strong resistance, price has to touch 3 or more times. So we can check. So for our already identified zones, we can check this out. Price bounces 1, 2, 3 times. So that is a strong resistance zone. So in this video, we've taught you how to understand support and resistance, their role in technical analysis, and how market behaves to these zones. So in the next video, we'll cover trading strategies on how to utilize this information that you already know, how to use risk management, and practical examples of how you can use support and resistance in your trading. So this is BEHAVIOUR FX, and stay tuned for the next video. Thank you.